Welcome back to the Daily Bitcoin 5. 5 stories every day that matter to Bitcoin. Today on the Bitcoin 5, Russia beats the USA to regulatory clarity. Let's go. Before the stories, the Bitcoin price check. Current price, about $64,600. Bitcoin has posted modest gains over the short term, up 2.3% over 4 days and 2.9% over 4 weeks, holding steady in the mid-$60,000 range. The real story lives in the 4-year comparison. BTC is up 178% since August 2022. A reminder that despite the recent pullback from April's about $71,600 high, minus 9.9%, the long-term trajectory remains firmly intact. Story 5. Strategy. Major Bitcoin buyer. Minor market participant. Strategy pushed back against narratives that its Bitcoin activity drives short-term price volatility. In a statement amplified by Michael Saylor, the company clarified, Strategy is a major buyer of Bitcoin, but a minor participant in its trading market. The comment comes as the company's stock surged over 30% from its June low to $94, even as it sold some Bitcoin to fund dividends and repurchased $106 million in preferred shares. It is steadily becoming clearer to the market and to the credit rating agencies that Strategy can indeed sell Bitcoin to fund dividends, whilst also tax loss harvesting by selling the Bitcoin that were acquired at a high cost basis. This proves that Strategy are not tanking the Bitcoin market when they sell. In fact, Bitcoin price has actually increased following recent sale announcements. This provides greater confidence in the underlying Bitcoin market strength and in turn provides more confidence in Strategy's balance sheet on which digital credit is built. The foundations continue to strengthen and those Bitcoin treasury companies who have weathered this bear market storm are positioned well for the bull market when it returns. Story 4. Korea Exchange Halts Trading After $186 billion. Wipeout. The Korea Exchange triggered circuit breakers and halted program selling for 5 minutes after the Kospi crashed 5.5% in a single session. The sell-off erased $279.7 trillion, approximately $186 billion in market value. Tech giants took the hardest hits. SK Hynix plunged 10%, while Samsung fell 6%. The move mirrors growing volatility across global risk assets as macro uncertainty persists. Story 3. AI voice cloning attacks. Hit major hedge funds. Hackers used AI to clone the voices of Wall Street executives and nearly breached some of the world's largest hedge funds. Citadel, Point72, and 2 Sigma, which manages $75 billion, were all targeted, along with several private equity firms, according to Bloomberg. The attackers replicated the exact voice, tone and phrasing of real executives, then called employees requesting system access. Point72 confirmed to investors it was attacked, but said no client data was stolen. Story 2. Clarity Act. Still in limbo as Senate recess looms, the US Senate leaves for recess in 2 days, and the Bitcoin Clarity Act still isn't on the schedule. Senator Cynthia Lummis remains optimistic, telling Bitcoin magazine she believes a vote will happen before recess. I don't think we'll be leaving on Friday. I think we'll go into the weekend. The White House confirmed President Trump is actively reviewing the legislation, adding some hope for 11th hour momentum. Multiple senators are now publicly pushing for action. Story 1. Putin signs Russia's first comprehensive crypto law. Russia just beat the United States to regulatory clarity. President Putin signed the law on digital currencies and digital rights, effective September the 1st, which recognises digital currency as property and establishes a licensed exchange market supervised by the central bank. Only the most liquid coins, Bitcoin, Ethereum and USDT currently qualify, will be allowed to trade on regulated platforms. Retail investors face strict limits, a 300,000 ruble cap, roughly $3,800 per platform annually, and a mandatory knowledge test. That's today's Bitcoin 5. Let me know your favourite story from today in the comments below and subscribe now so tomorrow's update lands directly in your feed. I'll see you tomorrow.